Hello? Oh boy. Test, test, test. Hello guys. Welcome back to XUA day something plus something else. Maybe I'll put it right here, maybe I don't want to edit it. So but I'm going over 2 days of trading. Whoa, today is the 26th. Oh, baby. So on the 20th, I'm not sure what day it is, but the first trade we took was a short. We made $0 profit, $0 loss. The 4 hour was bearish, 30-minute was bearish. We had a slight bullish retracement it was in. I said this was all this was a good trade. We followed all rules, but I clicked skip like this. Boom, one candle too late by accident. I also did that today, but that time the software actually had downtime, so I entered one candle late. 5-minute break of structure and a inverse fair value gap, so not a bad trade. It's good not to take a loss, you know. I'd rather take $0 than a loss. Our next trade oh, here it was. Let me show it for you guys. Here, tipota, that means nothing in Greek. Also miden, which just means 0. But here you can see so we entered somewhere. We entered on this green level, which was here. So if we had entered one candle earlier, it would have been here, which would have been a trade that would have hit take profit. Luckily, we actually managed to exit it before we got into loss somehow. I'm not too sure how that happened, guys, I'll be honest, because that's a little bit against our trading rules. Our next trade was a long, a 3% or something. Anyways, we took this much win on a long. The 4 hours bullish, 30 minutes bearish. So this was an amazing trade. We've blasted through all of our take profits. We should have set them up better. I made take profit to 20%, but instead I should have made it 30%. Then I hit stop loss in profit. We catch the bottom of a 4 hour bearish reversal based on a 4 hour equal lows being swept and a fair value gap getting hit, and on a 5-minute break of structure and a fair value gap. Of course, every trade here is in London. The majority of our trades are in London. And here, Nikao, that means I win. Nikao, I don't know past tense, but this was a win. Anyways, you can see this was a great trade. Boom, 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 boom. Our next trade was a loss. We longed, 4 hours bullish, 30-minute was bearish. Our 30-minute was bearish, so we should have waited for a higher time frame confluence. The Fibonacci level to be hit, because it was retracing up to the 61.8 level. I said it was a decent trade, you know, not too bad, even though we did lose. It happens some days. Inverse fair value gap and a break of structure we entered off of, and here is the trade. We longed, boom, but unfortunately did hit a stop loss, guys. The next today we took 3 trades. The session resets, and our first trade we longed, which was a loss in the 4 hour bearish markets. I said this was a bad trade. We longed in a bearish market. Bad decision, simple as that, man. I justified it through lower with a lot of confluences on lower time frame. We entered on a 5-minute break of structure, inverse fair value gap and a fair value gap. I'm adding a new note. Also, the time zone was off. It was UCT instead of UCT plus 2, and I discovered that this time zone resets every time you like after each week, basically every time you reset a session. Our new note is we can long after a massive 4 hour dump, but never after there's been a retrace already. So what does this mean? Boom, this dump, can you long? No, there's a little retracement here. Okay, what about here? Boom, massive dump, you can long here. Shoop long, you know, up here you could be catching longs, even though I would not. Like, this would be the only long I would take, to be honest. From here on out, I would wait for higher time frame bearish confluence and short on my strategy, and lower time frame confluences. But that is the new note, because it's a given. If price moves too quickly, there's bound to be inevitably there will be a retracement. Our next trade was a short, 4 hours bearish, 30 minutes was bearish. Good trade, followed all rules. I waited for inverse fair value gap and a fair value gap, as well as a 5-minute break of structure. I waited for a very good entry. However, I was slightly greedy with my trailing stop loss. I didn't trail it as much as I should have, in case it swept the stop loss and then continued to go down a lot. We lost some profits there. We can improve. Here was the first one, which was the loss, where I longed in the bearish markets. You see, guys, I don't know, it's not easy. I think we entered here, and then boom, it swept us down. The second trade right here, a very nice trade. We waited for this candle right here, the fair value gap plus inverse fair value gap, and then hit take profit, take profit, take profit, take profit. Up here, my stop loss was about here, but then I moved it up because I was like, oh, what if it sweeps and goes down? But it kept going up and it swept me, so I lost some profits there. Not the biggest error ever, but it's definitely something to improve on. Our next trade was a short. The 4 hour was bearish, 30 minute was bearish. I said this was a good trade. Okay, so this trade I could have entered on the first candle, even though I have a rule that says wait 30 minutes in between each session, because it hit all of our other confluences, plus it was a high conviction trade. Like, as soon as this hit this candle, I was like, man, it's about to go down, and I wanted to honestly short, but I remembered my 30-minute rule, and then it went down, so I waited a little bit for it to retrace. Then I shorted, and we hit take profit 1, and then back out at stop loss at break even. So it was a good trade. We followed our plan and bias, entered on a 5-minute break of structure, fair value gap, and an inverse fair value gap. Of course, all the trades were taken in London session, and I hope you guys enjoy. Thank you for watching. Bye.